Welcome to the deep dive. Today we're looking at something pretty remarkable, a financial pivot, some are calling, well, the second great corporate treasury revolution. And this time, it's not about Bitcoin. Nope. We're digging into the, frankly, unbelievable story of UPXI. You might know them maybe as a consumer brands company. Well, they just posted a record-breaking quarter by basically reshaping their entire balance sheet around Solana SOL. So our mission today for you is to really get the full picture here. We want to unpack exactly how UPXI pulled off this financial transformation. We need to get past the headlines, and understand the actual mechanics of using Solana as an active yield-generating treasury asset. And maybe most importantly, figure out if this super aggressive strategy means we're seeing the start of real institutional adoption for these high-performance DeFi ecosystems.
Okay, so let's just dive right in. How on earth did a company mostly dealing in, like consumer goods, manage to generate $78 million in gains from one crypto asset in just one quarter?
It really does set a huge precedent. When you look at their Q1 report, the scale of this shift just jumps out. I mean, total revenue hit $9.2 million. That's up, 109% year over year? Huge jump.
Okay, 109%.
And gross profit followed, right? $8.3 million, up 183%. Now, those numbers alone are pretty strong, sure, but they kind of hide the main event. The really crucial part, and this is what makes it so different from, traditional corporate finance, is how that revenue breaks down. Their digital asset segment, and this is mostly staking income, that accounted for $6.1 million of the total revenue.
Okay, now this is a really vital point for you listening.
Yeah.
Because there are two massive numbers flying around. You just said $6.1 million, which, wow, that's impressive realized income. But the figure that's got everyone talking, the sort of mind-bending one, is the $78 million in unrealized SOL gains they reported.
Exactly, and we really need to clarify that accounting difference is key. The $6.1 million, that's realized income. It's basically cash flow from staking rewards. They're generating actual revenue from their assets. The $78 million, that's the mark-to-market value increase on their SOL holdings because the price went up during the quarter.
Got it. So the $6.1 million is like the engine humming along, powering the business day to day, and the $78 million is like this massive turbo boost straight to the balance sheet value. Before this quarter, UPXI was actually showing a $1.6 million loss.
Right.
And this $78 million unrealized gain just completely flipped the script, led to a net income of $66.7 million. That is a tectonic shift, really driven by the asset's rising value, but crucially, like you said, underpinned by that $6.1 million in active revenue generation.
And that's the so what moment for Wall Street, isn't it? This report basically proves that companies can translate the, let's face it, volatile nature of crypto into measurable, ongoing cash flow and huge balance sheet growth. It positions Solana not just as some tech for developers, but as a serious, high-performing corporate treasury asset. It can generate Wall Street-level profits.
Which brings us right to the core strategy, because this is where it gets really interesting, I think. How exactly are they getting this yield? We all know MicroStrategy kind of pioneered the Bitcoin HODL strategy, right? Passive balance sheet growth.
Yeah.
But UPXI seems to be doing something fundamentally different here.
They are. It's all about active deployment. The CEO, Alan Marshall, made this big shift in the treasury strategy early in 2025. They decided to prioritize holding Solana directly. And look, this wasn't some small side bet. UPXI now holds over 2.1 million SOL.
2.1 million SOL. That is a profoundly concentrated position for a publicly traded company, isn't it? Just to give some perspective, that makes them the second largest corporate holder of Solana, right behind DeFi Development Corp.
That's right.
But for a NASDAQ-listed firm, relying on staking rewards and maybe lending, doesn't that expose them to pretty significant risks like smart contract bugs or, regulatory hurdles that traditional treasuries just don't face?
Oh, absolutely. It definitely introduces higher operational risk and regulatory risk, too. That's the trade-off they're making for that high yield. But the argument is that the strategy actually mitigates the holding risk by making the asset productive. Marshall put it very clearly. He said something like, substantially, all our Solana is generating a meaningful yield, effectively turning our treasury into a productive revenue-generating asset.
Yeah, that quote nails it. It highlights the active approach. They're not just letting it sit there hoping the price goes up. They're actively staking, maybe lending that SOL out. They're basically monetizing their treasury, using Solana's DeFi infrastructure, which is built for this kind of thing, to produce that $6.1 million quarterly revenue. There's a direct financial use of the asset.
And that focus on revenue generation is so important here. That $6.1 million in digital asset revenue, again, mostly staking rewards, already made up 2/3, like 66% of their total quarterly income. It fundamentally changes how you value the company, doesn't it? It's shifting from maybe a consumer brand roll-up story to almost like a digital asset yield farm, just one that happens to have some product income too.
Okay, but making a commitment this huge, holding 2.1 million SOL, that requires serious backing, serious institutional muscle. They didn't just find this SOL down the back of the sofa. Tell us about the capital expansion that had to happen to fuel this.
Right. This is where you see the institutional buy-in really becoming clear. To actually acquire and deploy assets on this scale, UPXI raised $200 million in a private placement back in Q1. That alone shows some serious initial investor confidence.
And then crucially, they locked in this massive $500 million equity line agreement with AGP. Now, maybe for listeners not totally up on corporate finance jargon, who's AGP? And how does an equity line like that actually work, especially for buying something as volatile as SOL?
Sure. AGP is AGP Alliance Global Partners. They're a well-known financial services firm.
Yeah.
And that $500 million equity line, think of it like an at-the-market or ATM financing tool.
Yeah.
It's basically a line of credit, but instead of borrowing cash, it lets UPXI issue new shares into the market gradually over time. They can tap into that capital whenever they need it. So say the price of SOL dips and they see a buying opportunity, or they need capital to deploy into a new staking protocol, they can draw down on that equity line.
So it gives them flexible, sort of on-demand capital for strategic buys without needing to do a huge, potentially disruptive public share offering all at once.
Yeah.
It sounds like a mechanism perfectly built for tactically growing their SOL position, buying more, staking it, getting it into those yield protocols.
Exactly. It signals a very clear long-term institutional commitment to this strategy. But as you hinted, the commitment isn't just financial, it's intellectual too. Just look at the advisors they brought on board to steer this thing.
Yeah, that was striking. They brought in Arthur Hayes, right, co-founder of BitMEX, very well-known macro crypto thinker. And they also got SOL Big Brain, who's a pretty key figure, a founder within the Solana ecosystem itself. Why were those two specific hires so important for validating this whole pivot?
Well, Hayes brings that macro credibility, His involvement basically signals to the broader institutional market that this isn't just some internal gamble by UPXI. It's a treasury strategy being guided by someone who really understands global capital flows, risk, and the long-term place of digital assets. He actually called UPXI's model a new blueprint for digital treasuries, yield-bearing, risk-managed, and scalable. High praise. SOL Big Brain, on the other hand, brings the absolutely essential operational chops. You can't just manage a, $700 million plus digital treasury actively on Solana without deep, intimate knowledge of the tech. Smart contract security, finding the best staking and lending strategies, minimizing those specific on-chain risks. It's complex stuff. So you have this dual approach. Macro validation from Hayes, and deep operational competence from SOL Big Brain. It's crucial.
Right, makes sense. So, okay, the strategy seems thought out, the funding is there, the advisors are top-notch. What was the immediate reaction from the market? Because the numbers here show this really interesting split, which kind of tells the whole story about this income generation model versus just passively holding.
Absolutely. The market seemed to get it right away. UPXI shares, the company stock, popped 6% in after-hours trading right after the earnings call. Went up to $3.21. And this happened even though the stock had a pretty rough year overall, down about 15% year-to-date before this. Clearly, the net income beat and the future revenue potential completely changed the narrative for the stock.
Okay, 6% jump for the stock. But, and this is the fascinating part, the actual underlying asset, Solana itself, SOL, it actually dipped in that same period, dropped about 7.9% in 24 hours, sitting around 154, turns around $55.
And that divergence is the critical takeaway, Shanu, if you're trying to understand this space. It really proves that a company focused on active yield generation can deliver strong revenue, deliver profit through those steady staking rewards, and also benefit from unrealized gains on the books, even when the underlying token itself is having a bit of short-term volatility. That income stream acts like a cushion against the token price swings, making the company potentially more attractive to traditional investors who are focused squarely on the profit and loss statement.
That really does reframe the narrative around Solana, doesn't it? We had MicroStrategy establishing Bitcoin as the go-to corporate treasury pioneer, the sort of digital gold standard for passive appreciating reserves. Now, UPXI seems to be establishing Solana as the pioneer for active income-generating treasuries. It feels like a second wave, maybe a more dynamic wave, of corporate adoption moving beyond just BTC and ETH, stepping right into these faster DeFi native ecosystems.
And you could argue Solana is almost uniquely suited for that role just because of its architecture. It's built for scale and activity, right? The transactions are incredibly fast. The fees are famously low. We're talking pennies, not dollars. That makes it ideal for a corporate treasury that needs to constantly be moving funds, staking, lending, harvesting yield, doing it all efficiently at scale. You probably couldn't execute this kind of high-frequency active management strategy effectively on some of the older, slower chains. The CEO seems convinced, calling Solana an endgame winning asset with nearly unlimited upside.
Yeah, that confidence really drives the whole strategy. Okay, so let's pull back a bit, look at the bigger picture. Is UPXI just a one-off success story, an outlier? Or are we genuinely stepping into what we could maybe call the Solana Treasury era? Well, UPXI's success definitely provides a massive proof point. It could absolutely inspire a whole new category of corporate treasury strategies. It plugs right into this broader macro trend we're seeing, where capital markets are shifting from just holding passive assets to deploying capital into more active, sometimes complex, but revenue-generating on-chain strategies. Capital always wants to find a way to work harder.
And we are starting to see other examples emerge, aren't we? We already mentioned DeFi Development Corp, holding the biggest SOL treasury. You've got Michael Saylor's strategy evolving its Bitcoin-backed models into more complex instruments now. And then there are firms like SUI Group, others creating specific yield treasuries aimed at institutional investors. It feels like a trend building, not just a single company's move. Definitely. And the underlying infrastructure is maturing to support it, which is key for someone like UPXI. If you look at the health of Solana's own DeFi ecosystem, the total value locked, the TVL, it's bounced back significantly. There's over $6 billion locked across important protocols like Jito, MarginFi, Camino now.
Okay, explain that for us. Why is that $6 billion TVL figure so important for a corporate strategy like the one UPXI is running?
Because that deep liquidity, that amount of value locked in the system is absolutely essential for managing risk at a corporate scale. Think about it. When UPXI wants to deploy, say, hundreds of millions of dollars into staking or lending protocols, they need to be confident that the market, that the protocol can actually handle that volume without causing massive price swings, what we call slippage, or creating huge liquidation risks if the market moves suddenly. Having robust TVL spread across multiple diverse protocols like Jito for liquid staking, MarginFi for borrowing and lending, Camino for structured yield products that provides the depth and the resilience that a NASDAQ-listed company needs to confidently run a huge active yield strategy like this.
That makes perfect sense. It really ties it all together. So UPXI, it seems, successfully transformed itself from a consumer brands company into this high-yield digital treasury powerhouse. And in doing so, they've validated using a performance-focused digital asset like Solana, not just as a reserve, but as a primary income driver. Which leads us to our final thought, something provocative for you to chew on. Will we see other NASDAQ-listed companies, maybe ones facing slower growth in their core business or struggling with profitability, look at this UPXI blueprint and think, hey, maybe we should transition our balance sheet into a yield-bearing corporate treasury built around an alternative, high-performance digital asset like Solana?
It's a fascinating question, and understanding these shifts, like the one UPXI made, helps you stay ahead of where capital markets seem to be heading. Corporate balance sheets are fundamentally changing right now in real time. This active treasury model, it really feels like the cutting edge of corporate finance today.
Absolutely. And look, if you found this deep dive valuable, if getting under the hood of how crypto is actually transforming real company finances matters to you, then, engaging with this content, subscribing, dropping a comment, giving it a like, it genuinely helps support the channel. It tells the algorithm that the stuff is interesting, boosts our visibility, and frankly, it allows us to keep making more deep dives like this one, covering these really important transformations. So we really appreciate you joining us on the deep dive.